Good morning, everyone. Morning grain notes here. We have, at the time of this recording, corn down a quarter penny, 5.39 and a quarter. Beans down 3 at 12.84 and a half. Corn right back up near that 540 resistance area, which slowed yesterday's bounce and so far has slowed the overnight bounce. We'll see if 540 is the new resistance that holds this market through the rest of this week, leading into Thursday's quarterly stocks report. The reasons for the corn bounce yesterday were varied in morning market commentary. The reason that seems to make the most clear sense to us is looking for a 32 million bushel decline in quarterly stocks on Thursday. If the last supply and demand report suggested a fair value of corn to be 530, then taking off 32 million bushels from that maybe suggests more around 535, but of course, if trade's getting a little overexcited, a move to 540, that's not really out of line here. So numbers wise, that seems to make the most clear sense to justifying yesterday's bounce and seeing the support continue overnight. Other talk for the corn bounce, some of it tied to energies. Crude oil, natural gas put in a major surge yesterday. Couple problems with that personally that I'm seeing here. If it was tied to energies, and let's say it does improve ethanol, we need a fairly significant ethanol improvement just to get ethanol back to the levels that USDA is currently assuming. We're running below USDA levels, so if ethanol improves, it would need to improve significantly to both match USDA estimates and go beyond their estimates to suggest a price bounce. Another reason, if it's tied to energies, why did bean oil not bounce nearly as much as we saw in corn? You would think that if this was tied to the energies, bean oil would have participated more yesterday. Another discussion is potential disease problems hurting yield. There has been various market comments about that last week. So far this week, it's now been talked about sort of post-rally as one of the possible explanations. And we may see a yield lowering, but we will again not see a yield change on Thursday. The next potential for lowering yield would be on the October crop report on the 12th. That's still pretty far out there to expect pre-trading of a lower yield. But we'll mention that was another potential story out there. Beans, quite a bit more cut and dry. Traders have been waiting to see sales to China. We did see 332,000 tons yesterday. Beans bounced up, went right to $13 resistance, and have eased back since then. We'll see if we get more 8 a.m. sales to China this morning to continue the rally, but they were looking for about that quantity, so a very small sell the fact trade was seen here overnight and maybe since that bounce to 13, but 13 is coming in as resistance. Keep in mind the fair value for beans is 12.50, so that this market in the beans is already over the fair value from the last supply and demand report, and Thursday's number for beans currently estimated to be fairly neutral, so not as much expectation for assistance from that report. Harvest pace 18% in corn. Trade was looking for 19%. We'll say that's pretty much close enough. And that 18% is above the 5-year average of 15%. Over in beans, harvest was at 16%. Trade expected 15%, again fairly close. And 16% is above the 5-year average of 13%. Switching over to cattle quickly. We'll point out that show list down 21,000. That would hint to $1, maybe $2 higher cash trade this week. It's Tuesday, so we're unlikely to see bids or offers probably until tomorrow. But if we do see anything, we'll send it out as a message later in the day. But solid start to the show list. One more thing to quickly note. In the morning grain notes, do a quick look at the natural gas, which is just on a tear to the upside. That does influence us for fertilizer prices this fall. So if you have a moment, take a quick look at the morning grain notes and read up on the natural gas when you have time. But that's what we're looking at here this morning. If anyone has any questions, as always, give me a call when you can. Thank you.